Hi everybody, Tom Guile here. Not only am I a real estate broker, but I'm the stats guy here at the Guile Group. And today what I want to talk to you about is the U.S. economy, because it's definitely on a lot of people's minds. There's been a lot of talk in the news about, where is the economy headed? There's some very political reasons about, are we headed for a recession? Is the continued current growth going to continue on? There's some real political reasons why people want you to believe one thing or another, because it's going to have a big impact, the economy is, on the 2020 elections. So what I want to do is get in front of you a little bit to give some facts so you can really understand what is going on and what does it really all mean. So first of all, let's talk about recession, because that word is being thrown out there. A lot of people are concerned about it. And first of all, let's talk about what a recession is. A recession is 2 consecutive quarters where the gross domestic product of the United States declines. That is a normal part of a business cycle. We happen to be riding the longest positive growth trend that this country has ever seen. And at some point, there will be some sort of slowdown. So really, I think it comes down to is when. Like I said, politics are coming into play, and some people want you to believe one thing and some people want you to believe another. So politics aside, I got some information from the Wall Street Journal where experts are predicting that we will see some sort of economic slowdown within about the next 18 months. So let's talk about what that means and what it means for housing. So if we look back at 2008, the recession of 2008 had a big impact on housing prices. That is fresh in everyone's mind. Recession does not equal housing price decline. As a matter of fact, when we look at the last 5 recessions going back to 1980, only 2 of them resulted in housing prices declining. And in 3 of the recessions, housing prices increased during the recession, and sometimes upward of 6%. So the 2008 decline happened for some very specific reasons, really related to mortgage. We're not seeing those reasons repeating themselves in the economy right now. So if we talk about where we think the economy is headed, or what's causing some potential slowdowns in the economy, the number 1 item is trade policy. Number 2 item is a stock market correction. Number 3 item is geopolitical crisis. So let's look at those items, and those are all very real things that are happening right now. And also, so keep in mind too, when there are things like a stock market correction, a lot of times when people leave the stock market, they're going to look for investments somewhere else. Housing and real estate has always historically been a very good investment when stocks go the other way. Housing, in this instance, is number 9 on the list. And again, I'm going to go back and talk a little bit about what the experts also think is going to happen to housing prices during the next about 5-6 years. In general, in the United States, the experts are predicting that we will see a decline in the appreciation level of homes. They're expecting the depreciation level to slow down to about 4% appreciation this year, then going down to 2 or 3% in the next couple years, and then going back at a higher level of appreciation again. Notice that I never did say the word depreciate. I said a slowdown in appreciation. So all predictions are pointing that the housing prices will continue to be strong, but just may not be as strong as what we've seen. Of course, this is going to vary from market to market, but in general, that's what we're looking at for the United States. So I hope this information was useful for you. Give me a call, email me if you'd like some more information. I can send you some more resources. There's a ton of information out there, and I just want to make sure that you've got the facts and make the best decision possible. So remember, who you work with matters. Work at the Guile Group.